afternoon, everybody. Welcome to the Moving Markets Podcast. I am Jeffrey Dunyan, owner and founder of Safe Option Strategies. This podcast is, of course, brought to you by Safe Option Strategies. Glad to have you here on a Tuesday afternoon. The U.S. stock market closed about 30 minutes ago, so we're going to talk a little bit about what happened today. I'm going to give you some thoughts on the challenge I think Jerome Powell has for tomorrow. That's going to be the focal point of today's podcast. I think he's got a tough job ahead of him. If he doesn't want to see these markets sell off pretty dramatically, he's got a tight needle to thread. Now, I've said that about the last couple of Fed meetings, and he's done a pretty decent job of threading that needle because the markets have continued to be overall bullish, and today was no exception. Nice little rebound today for the major stock market indexes. I should say a little add-on to yesterday, a nice little rebound from last week. So we'll talk about all of that, a little bit about what's ahead for the rest of the week besides just the Fed announcement tomorrow and Jerome Powell's commentary. As always, I encourage you to take a minute, check us out at sostrades.com. Take a peek at some of the different offerings that we have. We're doing fantastic this year. You want to be a part of it if you're not already. Enjoy today's podcast. It seems like every day when we start recapping what happened in the market, we have to put some focus on NVIDIA, and today was no different. NVIDIA started the day a little bit rough. They started to the downside. But as the day moved on, they came back and rebounded. And from its lowest point of the day down around 850, NVIDIA, its highest point of the day was 905, and it finished at 893. So 43 points off of its low of the session is where they finished. This is a company that even when you get a couple of days of sell-off, it's just a tough company to keep down. As you can see, the markets all finished, the three major indexes finished to the upside today. The Dow had a really nice move up, 320 points. The S&P, a decent move up because 0.5% is nothing to balk about. And the NASDAQ, after spending time in the red more than the Dow or the S&P did, actually rallied and came back and finished strong, largely on the backs of NVIDIA. NVIDIA was a big reason why the S&P and the NASDAQ were up today. I wasn't surprised by the fact that the markets were up. I thought yesterday they might add a little bit to yesterday's movement. This surprised me a little bit. I did not expect the Dow Jones Industrial Average to have that kind of a big move up, and it was largely on the backs of a handful of stocks. I mean, typically for the Dow to have a move of almost 1% up, you've got to have a situation where it's more than just a couple of companies. I mean, there are some heavy-weighted companies in the Dow that can drive the entire index up. A lot of people, look at the S&P 500 as a much better indicator of what the stock market as a whole is doing, simply because of the fact that it's a much broader index. You oftentimes hear it referred to as the broader index. It's a bigger sampling of companies. It doesn't move with quite the same volatility that the Dow Jones does. But still, it takes, for the Dow to be up as high as it was, it takes the majority of the companies. In fact, I think there were only 3 Dow companies that finished negative. A lot of Dow components were up, 1/3 to 0.5%. But Home Depot, McDonald's, and Apple seems to be really benefiting from that news about incorporating Google's Gemini AI search feature into their phones. I'm personally not a big proponent of that, but that seems to be what they're benefiting from yesterday and today. With the move up today, it puts us in an ideal position, I think, to survive if there ends up being a sell-off for the rest of this week. And what I mean by survive is, you look at this chart. If you're watching the video of this, you look at this chart of the Dow, and you've got now about, I want to say, the better part of 5 weeks where the Dow has now, let me count this. 1, 2, 3, 4. Okay, 4 weeks and a couple of days, almost 4.5 weeks, where the Dow Jones Industrial Average has traded in a relatively tight range. Every time there's a couple of good days of movement to the upside, you get a couple of days of some downward movement, and it's really been stuck in a range. That 20-day moving average has literally just flattened and is about as horizontal as you're ever going to see it get for any prolonged period of time. I don't know why anybody wouldn't have been expecting that. I think the markets were getting a little overbought. I think the rally had run its course. Even the NASDAQ has got maybe 3.5 weeks where it's also been stuck in a pretty tight range. And you're getting closer and closer to where that 20-day moving average is kind of flat. The S&P 500 has maintained a little bit more of an upward trajectory. Maybe you could just say that it's been a little more steady than the other two indexes. But tomorrow is going to be really interesting. I think Jerome Powell has an incredibly difficult job tomorrow. Since if you go back to the beginning of this rally, you might remember that a lot of what started this rally was when Jerome Powell said that the Fed was likely to cut rates 3 times this calendar year. This was end of 2023. He said, probably looking at least 3 rate cuts in 2024. Now, a lot of speculation got spun up, and people started thinking 5 or 6 rate cuts, and this speculation that there may be as many as 5 or 6 rate cuts sort of caught fire. And I think it was a lot of the reason that behind things driving up so much in November and December. Market started the year just on one sort of weak spot in the first week of January, and then it's been almost a straight uphill climb since then. But the markets have adjusted their expectation a little bit to rate cuts. We've had a couple of months now where inflation numbers at the very least have shown to be persistent, but in reality, they've actually ticked up just a fraction these last couple of months. And that's sort of causing people to rethink what might happen between now and the end of the year. What is interesting is that people are rethinking, and all they're doing is coming back to what the Fed actually said, which was 3 rate cuts. It was all supposition and rumors that the Fed was going to maybe do as many as 5 or 6 rate cuts. I never bought into the idea that we would get 5 rate cuts or 6 rate cuts in 2024. I'm now of the opinion that we may end up with only 1 rate cut in 2024, and I would not be shocked at all if we got 0 rate cuts. And that's because I think we're not done seeing inflation creep back up a little bit. And one thing you got to realize about Jerome Powell, I believe he is scared to death to repeat what Paul Volcker did in the late 70s when Jimmy Carter got annihilated in an election because of inflation, and honestly what it was stagflation. The inflation happened in Nixon's term, but throughout the 4 years that Carter was in office, they just couldn't get things down. And a couple of different times, Volcker cut rates, and then inflation kind of poked its head back up, and then he had to go back to increasing rates again, and it created this prolonged period of stagflation. I'll tell you, Jerome Powell is scared to death of repeating that, and I think he's going to be more cautious. I think it was stupid of him to say back in November, and look, I'm saying this as someone who benefited greatly from what he said back in the end of October. My portfolio personally has done very, very well in this bullish run that we've had, but I think it was foolish for him to telegraph that there would be 3 rate cuts or more in 2024. I think he's got to be really, really cautious tomorrow. If he tamps down the expectation that we could still get 3 rate cuts, the market's not going to react favorably to that. If he tries to stay really ambiguous, you're going to have some know-it-all reporter that thinks they're the smartest person in the room that is going to press him to try and get something definitive, and it may not be as easy for him as he would like to be able to say, we're not going to get, we're for sure going to have more rate cuts, or we're not going to get rate cuts. He's got to be really careful with the commentary he gives. I
I think I think he's going to try, and I think it's going to be difficult. If he says definitively that we are still on track for 3 rate cuts this year, you will see this rally take another leg up. And in the midst of some other economic headwinds, I'm not sure how sustainable that is, but I wouldn't have told you back in November, even at the end of November when we'd have this run up, I would not have believed that we would get this much more in the next 3.5 months. I just never would have pictured that happening, but it's happened. So, I was wrong back in November and the first part of December on what I thought would be the case, but I think it's getting more and more difficult for Jerome Powell to say the right things to keep this market happy. And I think there's a good chance you could see this market sell off in the rest of this week if he doesn't give some assurances that there's still rate cuts coming. So it's going to be interesting tomorrow. I'm going to be out of my office all day tomorrow, but I guarantee you at noon my time, which is 2 o'clock Eastern time, when the Fed makes the comments. More importantly, it's 12:30 my time, 2:30 Eastern time, when Powell starts his press conference. I'm going to make it a point to be tuned into the market and watch what's going on. And we're going to have a fun day tomorrow at the end of the day talking about what happened. So I'm going to wrap it up right there. Tomorrow we'll talk a little bit more about what's on the rest of the economic calendar for the week, but we'll end things right there. Have a great rest of your Tuesday and buckle up for tomorrow. It could be a wild ride. Thanks, everybody. Bye-bye.